Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, the Australian dollar grinds lower on Wednesday as it looks now towards the region of 69.15, seen as minor support. Beneath there is the firm key support level, that is at 68.45.55, which I feel where the bullish foundations hold. And if the market does approach this region, I expect to see the bulls defend and expect a rebound, which could possibly take the market back to 69.80 to 70.15. And it's viewed upon there that would need to be broke. That is from that level, that is a broken resistance, that could see a rally on to 71 cents. But at present, all eyes are looking at the support as the market remains cautious ahead of the US Federal Reserve Chairman Jerome Powell when he testifies to Congress later today and on Friday. It is assessed that although it's a little bit unclear if Federal Powell will break new ground from last week's rate hike, however, his testimony will be crucial after inflation fears triggered the central bank to raise its benchmark borrowing rate by 0.75 percentage points from 1% to 1.75. Investors are now considering such a mega hike at its next meeting in July and therefore could see US Federal Chairman Powell's increase of 0.75 of a percentage point but not be common, he did say last week. Looking ahead though, as I mentioned, the market is a little bit weaker. Let's see if the bulls will defend. The euro is also playing a little bit of a weaker play after earlier this week, speaking from the European Parliament, Christine Lagarde said that the bank might also make another rise in September. That is of an interest rate hike and therefore could see the market edge higher by 25 basis points. Still, from a technical point, we are breaking down for the euro and at present the support seen at 104.70 and beneath there 104.10.15. As earlier when the US dollar did stage a break back higher to around 104.40. If we do find support around 104.70, then we could see it rebound back towards 106. But it did actually nearly claim that high last night, but didn't sustain. The dollar yen rallied on now to a peak at 136.68, last recorded back in 1998. However, from a technical point, we still remain somewhat negative in terms of bearish divergence. So I'm not fully supportive at these levels. However, since the break above 135.5, I'm actually going to sit on the sidelines and wait for better opportunity. All eyes for the UK when the inflation or the CPI number will be announced, with the forecast around 9.1 with the previous forecast at 9%. If we do see a stronger number, then that would put further pressure on the Bank of England to potentially maybe lift rates by 50 basis points. So keep an eye out tonight and see how the market performs. Overall, though, I still feel the market on the top side can claim that region around 124, and any weakness into the European session should find support around 121.70. Sterling Kiwi, well, this is the last day I'll be talking about this market, as tomorrow I'll be looking at a new currency pair, cross-currency pair that is the sterling CAD. Looking at the market, we've got a bit of a surge occurring at the moment, and from that it's looking up towards 195.2025, and then beyond there I don't feel the market will sustain. It's interesting to see how this is coming back quite strong. I feel it'll be another bull trap, and then like before, seeing nearly a Marubozu candlestick. Nevertheless, I feel the market will eventually turn away from this top side and eventually continue this 191 to 196 range. Gold is somewhat weaker as it just breaking through the 1,830 level. I feel that if the market does continue this downward path, then we are looking to 1,814 to 1,800 and reassess from there. The upside should see a resistance around 36 to 38 with 1,850 to 52 above. Finishing up with oil, the market reached its objective, which was at 104 on the downside after the rejection from 109, which was the break level, put the bears back on course And now from this point, I am neutral, as we may see a bit of profit taking come back into the market like we did previously see, as you can see back here in early May. If so, the market may easily retrace back towards 109. So a little bit cautious here. Quite happy to see that the market, since that rejection of 115, eventually finding that flag to the bear case and then plummeting further, which has put me neutral. Well, that wraps it for today. Thank you very much for joining me. And as always, look after the interest rate, Paul. I hope you enjoy the rest of the day.